New Zealand retailers might be cheering the expansion of GST on all online purchases, but a tax expert is warning that it is unlikely to result in a massive growth for local shops. The government intends to have overseas websites collect GST on purchases worth less than $400. This is from October next year, that's October 2019. The National Party won't oppose the change, but it says when it was in government, it was advised that lowering the GST threshold wasn't worth the effort and probably the expense. PwC tax partner Geof Nightingale says while the move aims to correct the unfair advantage enjoyed by overseas retailers, it won't be a salve for old-fashioned shops who haven't got much of an online presence. I asked him what this government will need to do to enforce the policy efficiently.
The previous government got themselves to the point where it needed to happen and then got a bit tangled up in how you go about collecting it. But to be fair to them, the discussion document they put out in July 17 has basically been picked up and executed on by the Labor coalition. And so it is an example of kind of, general cross-party agreement. And the one benefit that I suspect that this government has over the previous government is they've watched the collection of GST on online digital imports, which is a similar system of voluntary registration by the offshore supplier, and that's been quite successful. A larger number than expected have registered and more GST has been collected than expected. And so based on that precedent, they're saying, well, we think we can make this work for goods as well.
Do you know, though, what the mechanism might be without getting too complicated about things? But, I mean, we do have some big organisations around the world that even warned Australia when it was thinking of doing this, and they're going to bring theirs in, I think, July this year. And we're following suit, and it won't be here until another 18 months, more or less. I think it's October 2019. But what's the mechanism, and what about those warnings? At the time, eBay sent a warning to Australia that this is going to be a problem. Might there be some big organisations around the world that just say, look, it's not worth it in terms of sending things to New Zealand, and that could backfire maybe on retailers, on buyers here?
Yep, I think that is a risk, but I think that risk is probably lessened over the last 12 to 18 months. And it lessens again by the way that the government's proposing to collect this. So they're basically going to make it very simple to register, and an offshore supplier will only really account for their sales. They can choose to worry about their costs and their inputs on GST, but if they've got no touch points, no New Zealand GST costs, all they have to do is put 15% on their sales and electronically register into the New Zealand Inland Revenue and fire it in. So it'll be quite easy to comply with. And yes, it's harder for the New Zealand government to enforce because it's all happening offshore and it's effectively voluntary from an international law perspective. But most of the large trading platforms and large goods businesses are showing a propensity to cooperate and register because they do want to do business, they do want to access the markets, and they do want to be seen as good taxpayers. So I think it's got a pretty high chance of working.
Now, finally, about cost. Stuart Nash made it very clear this morning that this was not about revenue raising, it was about fairness and applying that GST rule across the board. He says it'll raise around about $50 million a year. The question is, what will it cost to implement this? I mean, is it a waste of time at the end of the day trying to chase these small amounts from what are going to be ultimately lots of small retailers around the world? Do you have any idea of the cost that's going to be involved here?
No, it's very hard to estimate, but I actually think the costs will be proportionately quite low because the technology involved to register will be very straightforward. The platforms, the sellers of these low-value goods around the world, they're having to set up digital technology platforms to collect this GST for other countries or VAT or sales tax. I don't think it's a big job to do that. I suspect the Minister's revenue projections are low. The 50 million, I think, my sense, and it's a sense, but I think that's low. I think they'll collect a lot more than that. And the other thing is to worry about is the trend of where this is going. As our Kiwis online shopping is growing by about 35% a year, I think, year on year. So the trend is that revenue loss at the moment and future revenue from GST on this could grow or should grow.
And that's what I was going to ask you on finally, actually, is what about this call that this is going to stimulate growth for local retailers? Are we going to see that pretty immediately once this kicks in, what, October next year?
Yeah, no, I wouldn't say it would stimulate growth. I think it's an important change that levels the playing field to some extent, that will allow local retailers to compete more fairly, but they will still be under pressure from online shopping. There's a whole lot of other reasons people do online shopping, you know, convenience, wider range of choice, getting access to stuff they can't get from bricks and mortar retailers in New Zealand. So this won't change the dial dramatically, but it does cure an obvious unfairness and anomaly, and so it will be welcomed by them, but I don't think it's going to lead to a massive growth.
That's Geof Nightingale there from PwC.